Welcome everybody to a special presentation, an agent's guide to successfully selling short-term care insurance. This special presentation is done for agents who are appointed under Marty Puin and Associates. So it is my pleasure to do that, to do this presentation for you guys today. My name is Jesse Slome. I wear a bunch of hats. One of them is the creator and the director of the National Advisory Center for Short-Term Care Information. Some of you may know me because I created and founded the Long-Term Care Insurance Trade Organization, AALTCI.org, and Medicare Supplement National Trade Organization. But today we're going to focus on an exciting opportunity, and I don't like to use hyperbole a lot, but I will tell you that about 2 years ago, a number of the short-term care insurance companies and some major distributors asked me to really look at this product and help create awareness for it and put it on the map. And we have been doing that successfully. So if this is your first orientation to short-term care insurance, welcome. I'm going to give you a good primer on how it works, what the sweet spots are, how you can integrate it into your business. If you are a long-term care insurance specialist or a Medicare supplement agent, this is an ideal program. I'm going to give you a lot of rapid information, and we will try and get this video put up on YouTube so that you can rewatch it if you want. If you ultimately have questions or you want to get appointed to sell specific short-term care insurance companies, you need to call Marty Puin. His number is right there on the screen if you don't already know it. So write it down or email him because he is the guy to get you up and started, appointed to sell these products. So let's begin. Why should you even think about selling short-term care insurance? And I don't read the slides. I just give you a general overview. The reason is twofold. First, because it can help you get new clients. And if you're an agent, that's what it's about. New clients means more income. But secondly, and more importantly from where I sit, it can provide some real benefit to your clients, and that's what we're going to focus on. We're going to really talk about success, and this is what Marty does, and Marty works with us. So we support GAs and agents who want to be short-term care successful. I guess that's the best way to put it. And one of the benefits that you'll gain when you do this is some exclusive resources and personnel and support from working through Marty and the National Advisory Center, and that will help you be even more successful than if you just tried to do it on your own. So for example, over the years, for agents who are selling it, we've created a number of marketing tools that we make available after agents make some sales because it helps them open doors and close. That's just one of the things besides product knowledge, etc. You can get appointed through Marty with all of the major insurers out there, Aetna, Kemper, Medico, Standard Life. So you know, one of the benefits for you is sort of this being your one-stop shop. Now, I'm going to preface, this is an important slide that I always preface these presentations with. So short-term care insurance is not available in all states, and it's limited in some states. So if you are an agent selling in these states or you're based there, I always tell you you're free to watch this presentation, but to be really honest, there are no offerings available, so you know, it's good information, but you ultimately can't close the deal. So let's get into the who, what, and why of short-term care, because that's really what you're here to learn about. They call this thing short-term care, and that's what I'm going to refer to it as. But legally, the NAIC and the insurers will typically refer to it as recovery care. That's what the regulators like to refer to this as. But if you are going out and trying to talk to a consumer about recovery care, that's not something that they're familiar with. that they understand, it just doesn't resonate. So if as I have told insurance commissioners at various states, you can call it whatever you want, but if you ultimately want consumers to be interested in it and to buy it so that they don't turn to the government for their benefits, then you need to call it something that will resonate with consumers. So we have labeled the product short-term care insurance. Different from what they call short-term health care, which is sort of that gap filler when you leave jobs, etc. We're calling this short-term care insurance because it is designed to do exactly that, to provide a benefit for a short-term period of time, typically 360 days, so just less than 1 year. Short-term care insurance does two things. There's two primary markets for it. The first is it fills gaps for seniors, and it generally fills gaps in Medicare and Medicare Part D prescription drugs. Unlike if you're a long-term care specialist, and I assume many of you who are watching this working with Marty are long-term care specialists, you know that for LTC there's very clear definitions of what a tax-qualified LTC policy must be and what it must look like, and et cetera. Short-term care insurance currently does not have those defined definitions, as I would call them. The NAIC is looking at some of that, but right now there's sort of different categories of what we call short-term care products. One category fills gaps for seniors, fills gaps in Medicare and Medicare Part D. The other part is what I would call long-term care light, because these policies look and feel very much like a long-term care insurance policy that you might be familiar with, because they'll provide coverage from everything from home health care to assisted living to skilled nursing care. They'll provide benefits for anywhere from 30 to 360 days. And as I said, the LTC regulations do not apply. So I don't really call it long-term care insurance because that would create confusion in people's minds, and it would also upset regulators and others. But we'll keep referring to it as short-term care insurance. Let's talk a little bit about the marketplace so you understand. Short-term care insurance is definitely small by comparison to so many other products. The annual premium is between 75 and 100 million, which makes it smaller even than traditional long-term care insurance, which is still today a very small market. There are relatively few carriers in the business. Most are small with relatively low sales. There are a couple of biggies, and there are others who are looking at this as a viable marketplace to get into. And as I said, the NAIC literally, I think this week or last week, they had a call where they're starting to look at these products and trying to figure out what, if anything, they can or will do. But the good news is we survey the insurers at the end of each year. We've now done it for 2 years since starting the advisory center. And policy sales are up. So in 2016 compared to 2015, policy sales were up almost 17%. Premium was up 13%. And that is a good sign and a good news because, one, it's good for the insurers that are in the business. Two, when you have a growth market, other insurers start to look at it. Who buys short-term care insurance? You heard me talk about this as a senior product, so let's really define it. It is a senior product. 91% of buyers are age 61 or older. You can see the numbers yourself. These are folks who are buying it because it either augments some of the Medicare benefits that they may have or may not have, and it's a viable alternative to traditional long-term care insurance. And we're going to focus quite a bit on that. Buyers, a little bit more female than male. That shouldn't be a surprise to you, especially, and there's some really good opportunities with this product for women to do some long-term care planning. As you know, if you sell LTC, long-term care insurance now uses sex-distinct rates, which means women who make up about 2/3 of long-term care insurance claims pay more than men. Short-term care insurance policies tend to be unisex priced, so women pay the same as men. This is a real opportunity for women who can't afford. What people buy. I shared that policies typically are 360 days to some, one is 365. Most people are buying coverage that's anywhere from half a year to a year in terms of duration. And benefit amounts, it's funny, these look a heck of a lot like traditional long-term care insurance when you put side by side the charts. Most people are buying benefits that that you're pretty familiar with, anywhere from $100 to $200 a day in what I would call a benefit amount, or what you might call a daily benefit. The other good thing, before I started to agree to take on the short-term care marketing and to say I'm going to put this product on the map, I really wanted to know whether the insurers were paying claims, because there are lots of products out there in the insurance industry that people sell, and then it comes back to haunt you, 5-10 years down the line, where no, they're not doing what it's intended to do, and I don't want it towards the end of a career where I've really put my reputation on the line. I don't want to be out there shilling for a product that doesn't really benefit people. So I'm really pleased we started studying, again, for the past 2 years, claims. And specifically, this is 2016. In 2016, almost 25% more new claims were opened, and total claims paid increased. While it is still small, this is still a very small universe. That should make you feel good. It certainly makes me feel good about this industry, and that's why I'm happy to be supporting it and working on it. So why do consumers need short-term care? This is really what it's about. The first part, the part that we've just covered, gives you an overview, should make you feel good about the opportunity and what it is and how to do it. Now let's talk about why consumers need this. There are a couple of reasons. First, Medicare. I'm 64 and a few months now, so I'm getting ready to apply, and not apply, accept, and start to be on Medicare. And we all know that while there's lots of discourse in the United States about health care and rights and not rights and how do we do it and how do we slice it, there isn't anybody who at age 65 says, nope, I want to continue, I don't want to be on Medicare, blast that government program. People love Medicare. But there are missing pieces, and increasingly more missing pieces that can cost Medicare beneficiaries. And if you sell MedSup, you should be aware of them, because this is information to share with your consumers and prospects, and this is where short-term care insurance can fill in. I won't go into great detail about what's called observation status, but clearly, this is something that you should become more familiar with, because observation status now impacts a couple of million Americans every year. So when patients are hospitalized, Medicare wants, obviously, patients to be treated, but they also want to reward hospitals for certain practices, which basically means they want people to be treated and not come back to the hospital. And if they're an inpatient and they come back, let's just use for easy definition, it counts as a demerit for the hospital. So hospitals have an option to categorize a patient not as an inpatient, but to say they are under observation, which means they're outpatients. Now, they're not. They really are in a bed. They're getting the same treatment. They're staying overnight. They're doing all of that. But if they've been coded as under observation, it benefits potentially the hospital if they need to come back for, within a certain period of time. So there's an incentive to the hospital, they will never say this, to categorize people as outpatient. And I would urge you to watch a video that appeared on the nightly news, the national nightly news on NBC, that explains how those two words, observation status, can cost your Medicare patients thousands. We have a link to find it. You can search for it yourself, or on shorttermcareinsurance.org. If you do /NBC-gap, you can actually go and watch the video yourself, and I would urge you to become familiar with this. Not only that, in 2016, the Medicare and You handbook for the first time referred to the observation status. So Medicare realizes that this was an issue. Interestingly, in the 2017 handbook, they still have the copy, but this little blue arrow, the important, that's exactly how it looked in the 2016 handbook. They've taken away the important arrow for whatever reason. They're trying to, I don't want to say they're trying to downplay it. Maybe they feel that they did the job in the 2016 book, but certainly that's a big change. So observation status. Short-term care insurance can help cover these gaps. It can cover, so if people are being categorized as under observation status, what are some of the issues? Well, first, there are going to be some costs that when you're admitted under observation status that are not going to be covered. But more importantly, if you're familiar with long-term care insurance, you know that many people who go into the hospital then are sent off to spend some time in a skilled care facility. And this is the very important aspect. If you are not inpatient, your care in that skilled care facility will not be covered by Medicare, even though you've had a, quote, hospital stay. It's not how the rules will view it. So a short-term care insurance policy can cover that care in a recovery center, and that's why literally it's recovery care. But again, people don't, now you have to spend all your time educating them. It's much easier to educate them to the fact that there are important changes to Medicare that can shift the cost, the burden of cost from Medicare to you. This is one of the consumer advisories that we create and offer to agents who ultimately are successful selling. We will personalize it, but we do it after an agent has started to make sales. But at the very least, if you're dealing with seniors, you should make sure that when you're referring to the Medicare handbook, you're referring to page 34 of the 2017 handbook and explaining that a policy called short-term care insurance can fill the gap. Second thing for Medicare patients, many seniors pay for prescription drugs. This does not come as a surprise to you. You understand that. With very rare exception, have I ever run into an American who does not take any prescription drugs. There are millions of people who do, who take multiple drugs. If you sort of look at the chart on the right, you look at some of these drugs, and how many millions of people are taking them for blood pressure, for cholesterol, and they're taking multiple ones. And these drugs can be costly, okay? A year supply easily can cost several $100s, even if you have, different drug plans. There are short-term care insurance policies that can help cover prescription drug costs. We show one here actually for North Carolina, although I think next month the premiums are changing. But this was a real sweet deal. So on some of these policies, if a client's prescription cost, and I put cost into quotes because what the companies look at is actually the retail cost or the receipt, what shows on the receipt, not what the client is paying, and even they discount the fact if some of that drug has been reimbursed. They look at the actual declared cost of that drug by the pharmacy or the CVS, etc. And if a client's prescription costs are $300 or more a year, some of these policies are well worth looking at because you can kind of see on the right, as I said, North Carolina, you could have a drug reimbursement benefit of $250, be 70 years old, and your premium is $169, and there are other benefits in some of these policies that we'll talk about. But even in other states like Illinois, the premium is $434. If you took prescription drugs that totaled $300 after a deductible, you'd get back $250. And as I said, some of these policies also pay for other benefits, such as rehab care and even some home health care aid coverage. So these are policies that are definitely worth looking into and learning more about. I'm giving them sort of a quick gloss over to tell you what are some of the reasons to start thinking about short-term care. But once you really start to look at it, you will understand. Your marketing idea is if you're telling, if you're dealing with clients who are 65 and older, ask them if they take prescription drugs that have a retail cost of $300 or more. If they do, you have a solution. Now, we also talked about therapies. I said briefly that when people go into a hospital, they get a couple of days of care, then they're sent off to a skilled nursing home or outpatient to get their rehab. And rehab, when it's covered by Medicare, it's typically required that it be given at a center, not at a home. And so it's very common that people get physical therapy because they have a fall, they have a hip or knee replacement, a stroke, heart attack, etc. Or they get speech and language therapy, same things. So there are millions of people who are getting this type of care every year, every day in America, especially seniors. So care is required to be given, typically, or it's reimbursed, not required to be given, but it's reimbursed if it's at a center. That's how Medicare can control how it's given. But people like to and want to have two things happen. First, they may want or need more therapy than Medicare will cover, because it will help them recover faster. It will help them recover better. And secondly, today, the push is to get people back into their house. If you think about it, my mom underwent hip replacement, major surgery in her late 80s. She was in the hospital for 3 days. She was in the nursing home for 20, obviously, because it was covered, and boom, she's now home. Now, Medicare did send, my mom is in pretty great health, actually, so she recovers pretty well, but not everybody does. And Medicare covered a little bit of house visits afterwards, but imagine for the person who would need more care or wanted more care in their home. Some of these short-term care policies have a prescription drug benefit, and they have a therapy benefit that will allow for people to get care in their own home, to reimburse them for it. And that's preferable because a lot of people want care in their own home, or they can't get access. You're a single, my mom was in her late 80s, after her hip replacement, it's not like she could drive. So she needed care, additional care in her own home. and more treatments. Even if you look and you say you can get to a facility to get your treatments, sometimes more treatments can be beneficial to your recovery. So short-term care insurance replaces that. Lastly, I talked just a slide before, I know why I put that in there, because I talked about the observation status. So Medicare limits what's considered long-term care. We've covered that. So for all of those reasons, short-term care insurance policies are beneficial to people who are on Medicare. Now let's talk about the other side of the coin. Long-term as a viable alternative or option to traditional long-term care insurance. People know that for 20 some odd years, I have been an ardent supporter of traditional long-term care insurance. I still am. Nothing has changed. And some people don't like to hear me, you know, what I call talk the truth. They view it as negative, and we shouldn't share negative realities, but realities are realities. Facts are facts, and I believe ardently in facts. So traditional long-term care insurance has a problem, not just one problem, it has many problems. Policy sales, which were as high as 754,000 individual policy sales in 2001, 15 years later, they're down to 91,000, and they continue to drop. Why is that? A couple of reasons. Cost. Cost was always an issue. You know, just I throw up some pretty graphics, you know, retired people have little or no savings. Some of that is coming back now that the economy is a little bit stronger, but certainly that was a paramount reason for the sales decline. They have nothing saved for retirement, and you have a lot of women who are retired or single alone, and they have even less than men. Health is a greater issue today than ever. It's always been an issue in long-term care insurance. After age 65, anywhere from 40 to 50% of applicants were declined because of existing health issues, and that's the people that an agent looked at and said, hey, I'm going to take the time. Let's take a chance. Let's fill out this application and submit it. Today, with fewer insurance carriers offering traditional long-term care insurance, they have the luxury of even being more ardent in who they will accept and who they won't. And so if we did the statistic today, I bet the numbers of declines would be the same or would even be higher, as many agents don't even submit case. Age was always an issue in traditional long-term care insurance. There are very few people that looked and said, oh my God, you know, I'm 55 years old, I've got to start planning for long-term care insurance. When do they do it? Just before I started this webinar, the association offices had a call. I'm calling for my mom. She's turning 82, and I think she needs some long-term care insurance. You know, well, sorry to tell you that that's not a possibility. And then lastly, negative news. There is no question that that people today, before they're buying things, they Google, they go online, an increasing proportion, and they're not oblivious to all the negative news stories that are out there about, you know, a company being liquidated or prices going up. This was a price index we do every year, and the media, you know, we didn't explain that prices went up 9%. That's how they spin it. And actually, there have been, I could have thrown up lots of headlines of companies that have had rate increases on existing policies of 80%. So short-term care insurance is a viable planning solution when health, cost, age, or even bad news is an issue. So let's deal a little bit with that. But before I start, I'm going to change my tone. I'm going to take a deep breath, because if you have been selling long-term care insurance for 20 years, you basically have a mindset of that I call, oh, The traditional long-term care insurance, people aren't buying it because they just don't get it. If only they really got it, then they would buy LTC insurance. And you can keep thinking like that, and good for you. But yeah, at some point you got to look and you got to say to maybe the consumer is right. So I have to get a lot of traditional LTC insurance agents to stop thinking the way they've been thinking. And so one of the ways I'm going to do that is by sharing facts. Why do I believe that short-term care insurance is a viable option for someone needing long-term care? For the following reason. 41% of long-term care insurance claims, 41%. That means first, someone has to buy a policy, then they have to go on claim, and they got to meet the two hurdles to go on the claim. 41% of claims last less than a year. Let that sink in for a while. Short-term care insurance policies pay a year's worth of benefits. Almost half of the people who would have bought a long-term care would have made do with 1 year or less of benefits. Some coverage, I believe, is always better than none. If you can sell somebody a 3 or 5 year policy, God bless you, go do it. Keep doing it, okay? I want to see long-term care insurance sales stop dropping and start growing again. But the chances are that when age, health, or money is an issue, you're going to sell them nothing. One other issue. Traditional, and I created this graphic because I think it's really important, especially for the traditional long-term care insurance agents who've been doing this so successfully for 10, 15 years and are frustrated, and they're blaming the clients, and saying they just don't get it. Let me share with you. Long-term care, in order to qualify for benefits, there are two hurdles that a policyholder has to jump over or meet, okay? And we always focus on the one, and so does the media coverage. They all talk about, well, you got to have your elimination period, which is 90 days, and so you got to be prepared to take care of yourself for 90 days. But that's only one of the two hurdles. The first hurdle is meeting the 90-day certification. And what I share with people is that today is not a layup. If you go in for a hip or a knee replacement, the doctor knows that you are rarely going to be certified for needing care for 90 days from now. You're going to be in the hospital for 3 days, you're going to be in recovery for 20 days, and by the end of the 20 days, you will be walking and taking care of yourself. So it's very rare, and typically agents, oh, well, we all know somebody who's needed a hip replacement or a new. Well, that's considered long-term care. And yeah, it kind of is. I find that a little bit personally misleading, but I understand that it's, shared by agents all the time, and then the HHS qualifies a 2-day need as long-term care. But the reality is people like that would not meet the 90-day certification. They would be on the graphic, the woman at the end facing those hurdles, on her crutches, not qualifying for benefits. Short-term care insurance has only one hurdle, okay? You have to meet, the triggers for it, but you do not have that 90-day certification that a tax-qualified long-term care policy. And so you are literally offering people a significant benefit, a benefit that they'll qualify for faster, and one that very likely can meet their needs. Lastly, or not lastly, we talked about when health is an issue. Some of these policies just have a few yes/no questions. A home health care policy that can provide some benefit with basically 4 questions. The 5th one is, do you acknowledge receipt of an outline of coverage? And if you can answer correctly, 98% of them are approved. we talked about when health is an issue, and I have to change the slide, as I say, because the North Carolina rates have changed. So let's look at a policy that can provide a limited amount of home health care benefit for someone up to age 85, and the annual premium is $950 a year in Illinois. And actually with these policies, while you look and you go, all right, it's a de minimis benefit, albeit it's true, but you can double up the policies. You can buy 2 of them. So health is an issue. These policies, short-term care and policies, typically have anywhere from 4 to 12 yes/no questions. Many don't have cognitive interviews. Some don't require health records. And some will accept those who have been declined for traditional long-term care insurance. I advise agents who are selling long-term care not to do what I call a bait and switch and apply and then wait for somebody to be declined. But when you're finding and talking to a prospect where you think it's iffy, I would look right at the get-go and say, listen, today, traditional long-term care insurance companies are being more selective in the applicants that they will accept. We're going to try, but I want you to be prepared that if this doesn't happen, there's an alternative option that will provide some benefit, which is always going to be better than none. And when cost is an issue, so I'm just sharing some actual, this is for a 26-week home care benefit period with a 0-day elimination period. And that 0-day elimination period, I think, is so important, again, especially for women who are on their own, because when they come out and need care, they don't have the support of a built-in spouse or partner caregiver. So you look and you go, at age 83, imagine being able to offer somebody half a year of home health care benefit for $100 a month. And $100 a month is basically a sweet spot. So I've said cost is always an issue when you're selling anything. You can't sell something that people can't afford. Long-term care, I've explained, is a woman's issue. 2/3 of claims, LTCI claims, are paid to women. There are 3 times as many widows as there are widowers. So what I call the women on their own, widow, divorced, single women, is a huge overlooked market that nobody wants to talk about in the long-term care marketplace. Everybody, oh, well, people who buy this are couples. Well, if all you do is target couples with a solution, guess who's only going to buy is couples. But you have mass numbers of single women. And I don't know if there are any women on this call, but if there are, I want to encourage you and say you should be talking to single women. So let's talk about, these are actual rates. This is a short-term care policy that pays a daily benefit of $150 a day, 360 days. Home care benefit, yes, it only pays 75% of the benefit for home care, and I put in a 20-day elimination period with a 5% simple compound inflation option. Remember you were selling inflation and how everybody said, oh, well, 3% is the new 5%. These policies still have 5%, which really is great if it's priced right. So look at the premium. This is a 65-year-old woman in preferred health. $100 a month. And to me, $100 a month is the magic point. Another short-term care policy, very similar, does have 100% home care, but it's $2,000 a year. And a top long-term care carrier with basically the same thing, only 50%, is twice what the short-term care policy costs. Remember when I said that these policies are ideal for women on their own? My God, I mean, this is really $100 a month. If I were in sales, I am shocked that more people aren't doing this. Now, Inflation, you're starting to see news of inflation rearing its ugly head. Maybe that will happen, maybe it won't. But again, I look and say, people look and go, oh, well, this isn't enough for, coverage for a woman. Well, these policies also have compound inflation options. And so instead of $1,200 a year, it'd be $1,669 with a 5% compound. That's $286,000, I think, when you reach 85. And that's when people are going to need care. This is a real short-term care insurance is just so overlooked in many cases because agents have the mindset that this isn't going to, this isn't right. I'm just so used to selling traditional LTCI that I'm not even going to bring it up. Age. Age is always the issue, I said, and it always is. Here are the ages. Look at these companies. One of them will accept applicants up to age 89. Most will go into their, certainly in their 80s. Look at the right thing. Medical records. No, no. Underwriter's discretion. Seldom, seldom. I'm not sure what more to say. So why is short-term care insurance a viable option for agents selling who are looking to sell LTC? It's affordable. It's easier to health qualify for. Unisex rates make this ideal if you're talking to women on their own. You can get older ages and fast decisions. And for those of you who still ardently believe that long-term care insurance is about to come back anytime as soon as consumers really get it, that they've got this vast need out there, well, we're going to keep doing our job of telling people that some benefit is better than none, and that claims are typically can be a year or less, and that short-term care might just be what they need, and that without that 90-day certification, they're going to get access to their benefits faster. And if that's not enough for you, so one of the companies that that you can get appointed with, they'll have their staff complete the sale. And agents, when I typically say that, go, oh, what do you mean? I'm gonna, well, here, I'm gonna complete the sale. Yeah, well, good luck to you. Do you think a consumer trusts you, or do they trust the insurance company's employee who can get on the phone and say, listen, I'm here, I work for the actual insurance company, I'm here to explain this to you, I'll answer all of your questions, and I'll help you apply, I'll go through everything with you. And there's usually a mindset, especially among long-term care insurance agents, oh, why would anybody do this? Well, half of this company's final expense sales are made this way. The agent gets on the phone with the client, and they bring in the company person, they introduce, they start. Some of them stay on the line. Some of them just say, Mary, listen, you're in good hands now. I'm turning you over. The company person will answer all of your questions and take your application and see ya. And people understand that. They're buying stuff over the phone and over the internet. So I'm not sure why, except for old mindset of people looking and saying, I have to do this myself. But if you want to, God bless you, go do it. Some companies will even accept credit cards. So I look and I go, so remind me why you're not immediately getting off this call and contacting Marty to start getting appointed with these companies. I will tell you that I have watched. I'll end my presentation like this. Starting something new is not easy. It takes some learning. It takes a little bit of acclimation. But I've watched over the past year a number of traditional long-term care insurance specialists who have very successfully done a couple of things. One, they've started talking to clients, and when they realized that they were not going to be able to health qualify for traditional long-term care insurance, they started offering them short-term care insurance as the viable option, sometimes as the only option that's going to be available to them. And lo and behold, clients are buying. Not just one policy. Sometimes they're stacking them. Clients want some long-term care planning solutions. The second thing that they're finding is that when they're selling to a couple where one can health qualify but the other can't, often both sales are lost because the agents, well, let's just go get this, let's go see what happens, and they submit the case, and one is declined, and the other spouse says, look, if they won't take both of us, it's a great excuse. We're not going to do this, period. And they lose everything. And there are all these reasons why so many, long-term care insurance agents are basically disheartened and not selling this anymore. They now go in and they're splitting the case. They're saying, look, this is the deal. You can get this, but your spouse can't. But at least with maybe a year of care, you have some benefits. You have some transition time. You have some support. And so I have watched agents who initially looked and said, oh, I don't think I want to do this. I don't think I'm going to do this, suddenly starting to do it. And when they saw how easy it was and that the client was receptive to it, it's now become standard practice for them. Some of them are selling as many short-term care insurance policies as they are long-term care insurance policies. You're never going to get rich selling short-term care. I'm going to end on a realistic note. I'm going to tell you that so many people, oh, this is the way you start doing this, and oh my God, the money is just going to flow in. That's not the way it works in short-term care. The commissions are competitive, but the premiums are lower. But it's the right thing to do for your clients. And building an agency business for yourself means doing the right thing for your clients because you never know when they're going to refer somebody else to you. And secondly, when you're going to go back to them and they're going to look and say, oh, I do need something else. It's about building clients and it's about doing the right thing for them. And that's why I'm an ardent believer in short-term care insurance. So I want to thank you for watching this presentation. I hope that you will get appointed. I hope that you will start becoming successful and that, you'll end up becoming a short-term care insurance sales superhero. So thanks so much for watching.